You want to buy a home, but saving for a down payment feels impossible, especially with everything getting more expensive. But what if I told you with the right strategies you could save faster than you think? In this video, I'll show you proven ways to cut costs, boost your savings, and hit your goal of homeownership faster. First, how much exactly do you need for a down payment? Many people believe they have to put 20% down, but that's not always the case. For a $400,000 home, which is about the median home price nationally right now, a 20% down payment is $80,000 plus closing costs, which is $24,000 on the high end and $80,000 on the low end. So that's around $100,000, which is the amount you would need to buy a home at the median home price. With how expensive everything else is in the world, it's not realistic to be able to save $100,000 very easily for most people. There are some low down payment options. There's the FHA loan, which is 3.5% down for credit scores 580 and more. If you put 10% down, you can have a credit score from 500 to 579 and still get approved for the FHA loan. Then there's the conventional loan, which traditionally people think it's 20% down. However, it can be as low as 3% down. The average that buyers are putting down for mortgages nowadays is at about 10%. Then there's the VA and USDA loan, which are both 0% down loans for eligible buyers. The VA loan is for veterans, active military, and eligible spouses. The USDA loan is for homes in rural areas, and there's an income limit for buyers. So, what does this actually look like? Let's say you're buying a $300,000 home. If you get a conventional loan at 3% down, you'd need $9,000. For the FHA loan with 3.5% down, you'd need $10,500. And then for the VA or USDA loan, it's 0% down, so there's no down payment. But with any loan type, you still need closing costs, which is around 2 to 6% of the purchase price. Knowing your loan type helps you set a realistic savings goal based on what's actually required. Now, I do want to mention that there is a benefit of putting 20% down on a mortgage, which is that it eliminates private mortgage insurance, or PMI. PMI is a fee that you pay as a homeowner to protect the lender if you default on the loan. The FHA loan and USDA loans have a version of mortgage insurance that would be for the life of the loan. Except for the USDA direct loan, it doesn't have that fee on it. It's only for the USDA guaranteed loan. With the VA loan, there's no mortgage insurance. So now that you know that you don't need 20% down to buy a home, first off, what you want to do is figure out exactly how much you want to try to put down on a home. You want to set a realistic savings goal for yourself. Determine how much you need based on your price range. You can use a savings calculator to estimate how much to save per month, and then set a realistic timeline based on your income and budget. Once you have your budget, you can figure out how you can reduce certain costs. The first one to look at is your housing costs. If you rent, consider downsizing. Moving from an $1,800 a month apartment to a $1,400 a month unit could save you $4,800 a year. Even better, getting a roommate and split the cost of living. And if it's an option, moving back home for even 6 months could free up thousands of dollars to jumpstart your down payment fund. It may not be the most ideal, but I've done it before and it does work pretty well. You could also try to negotiate rent with your landlord. Sometimes they'll offer lower rent for longer leases or upfront payments. Depending on what the rental market looks like in your area, you may or may not be able to do this. You can go to my website at workwithdang.com for free resources like a quick start home buying guide and a home buyer's course. I can help you find a real estate agent in your area. There's more information on my website. Then you want to look at trimming any unnecessary spending. You want to track your expenses. You can use budget apps to help. Cut non essential expenses like streaming services, gym memberships, or subscription boxes. This is obviously if you're trying to save money quickly, you can start to trim things down if you want. Limit dining out and start cooking at home if you don't already. This alone can save hundreds of dollars per month. If you've ever followed Dave Ramsey, his advice is beans and rice. It gets old after a while, but it is effective. I've done it before and rotated it with ramen to change things up a little bit. Then you can try to lower your monthly bills. You can shop for cheaper car insurance. You can reduce your energy bills by using LED lights and adjusting the thermostat. You could reduce services like cable and cell phone. You can always call your current providers and see if there are any deals that you could qualify for. These may seem like little things, but if you combine all of these things together, you can save hundreds of dollars each month. Then you want to pay off any high interest debt that you have. Prioritize credit card debt since high interest payments can drain your savings. Consider a 0% APR balance transfer card to reduce interest. However, you have to make sure that you don't use your credit cards now that you don't have a balance on them. Many financial experts will caution you about putting your debt into a 0% balance transfer card just because they are worried that you'll start using the credit cards again and have more debt. So just be careful. You could start by paying off all of your small debts first, which is the snowball method. Or you could focus on high interest debts first, which is the avalanche method. Both are effective. It's really what your preference is. If you really want to nerd out, you can use spreadsheets to figure out what would be more effective in your situation, the snowball method or the avalanche method. Then you can try to increase your income to save faster. You could try to negotiate a pay raise at work. You could research salary trends in your industry and ask for a raise. However, I know that can be tough nowadays. Some employers aren't giving out raises and they'll tell you that you're lucky just to have a job. Another thing you can try to do is get a side hustle or part time job. You could do freelance work on websites like Fiverr and Upwork. This is for writing, graphic design, web development, all kinds of stuff is on there. Then there's your tried and true rideshare and delivery companies like Uber, DoorDash, and Instacart. These are flexible ways to earn extra cash, but I would caution just to make sure that it makes sense for you. There's depreciation of your car and things like that, so it may not be the best financial move for you to use your car to try to make money. If you have a spare room, you could rent that out on Airbnb if that's allowed in your area. There are also some dog walking apps out there that I've had personal success with when trying to earn extra money. But again, you just have to make sure that it makes sense for you because you might be using your car to get to each dog walking job. You could sell unused items for extra cash. You could try to sell things like old clothes, electronics, or furniture on Facebook Marketplace, Craigslist, or Poshmark, and there's a bunch of other apps out there. Just be careful when you're doing transactions with people. You can have a garage sale to declutter and make some quick cash. You can use down payment assistance programs to lower your down payment amount. Many states offer grants and forgivable loans to first time homebuyers or people who haven't owned a home in a few years. The program varies by state, so check the HUD's website, hud.gov, for local options. There's also downpaymentresource.com. You can check with your employer to see if they have employer homebuyer benefits. Some employers offer down payment assistance as an employee benefit. You can check with your HR department to see if this is available at your company. Nowadays, I don't see as many companies offering this, but it is a thing that some do offer. You can use a first time homebuyer savings account. In some states, you can save money tax free and use the first time homebuyer savings account for a down payment. Contributions may be deductible, helping you save on taxes while saving for your home. If you happen to be in a fortunate enough situation where you can get gift funds from family, that's another way to be able to get money for a down payment on a home. Most loans allow family gifts for down payments. Lenders may require a gift letter confirming that the funds don't need to be repaid. If you're going to get gift funds from a family member, you want to check with your lender first to let them know so they can walk you through that process. Sometimes there are a few nuances to getting gift funds for the down payment. To save money quickly, you can use smart banking and automation strategies. First, you could open a dedicated down payment savings account. You can keep your savings separate to avoid spending it on other expenses. You could also use a high yield savings account to earn interest on your savings. You can automate your savings by setting up automatic transfers to your down payment account every payday. You can also use things like tax refunds, work bonuses, and other various checks that you might receive to go straight into your down payment fund. Now, when you're saving aggressively like this, it can be difficult to stay motivated. I found that tracking your savings progress weekly or monthly can help. You could use a spreadsheet or app to show you how much you've saved. Then you can adjust your savings plan if needed to stay on track. And it's not a bad idea to reward yourself for milestones. You can treat yourself when you hit mini goals like maybe $5,000 or $10,000 saved. Keep rewards low cost, like a fancy home cooked meal instead of a $200 shopping spree. Maybe instead of beans and rice that night, you have a nice steak or fancy mushrooms, whatever you're into. You can join a first time homebuyer group or community. By staying accountable and by joining Facebook groups or forums for home buyers, you can learn tips or get support from others who are also saving. I found that these kinds of groups can be motivating to keep you on track. Once you've saved enough money for a down payment and closing costs, then you're ready to start house hunting. It's better to wait until you're financially stable than to rush into buying a home with little savings. If home prices are rising fast in your area, you may want to buy sooner before prices increase further. Every situation is unique, so consider your budget, market conditions, and financial stability before buying a home. Please like, comment, and subscribe if you've gotten any value from this video. It helps me out a lot.